What are final accounts? Final accounts refer to the financial statements prepared at the end of an accounting period to determine the profit or loss and to show the financial position of a business. They consist of 1. Trading account, it calculates gross profit or loss. 2. Profit and loss account, it calculates net profit or net loss. 3. Balance sheet, it shows the financial position, assets and liabilities. Let us have a look at format of all of them, one by one. Format of trading account includes 4 columns with debit and credit side. In debit side includes opening stock, purchases, purchase return is deducted from purchases, wages, carriage, power, fuel and other direct expenses. Credit side includes sales, sales return is deducted from sales, closing stock. The balancing figure in debit side is gross profit, and if it comes in credit side it is gross loss. Profit and loss account format includes the same headings. Debit side includes all the indirect expenses, and credit side includes all the incomes. Gross profit of trading account is also transferred in credit side of this account. The balancing figure in debit side is net profit, and if it comes in credit side, it is net loss. In balance sheet format, liabilities are written in left side, and assets are written in right side of the table. Here we can see liabilities include capital after adding net profit and deducting drawings from it. This side includes all the debts and financial obligations of the business. The asset side includes all the current and non-current assets, and for fixed assets, the amount of depreciation is always deducted. It also includes closing stock. Total of debit side is always equals to credit side total. How to prepare final accounts, step by step. Step 1. Prepare trading account. Use all direct expenses in debit side and all the incomes in credit side. Find gross profit or loss. Step 2. Prepare profit loss account. Start with gross profit from trading account. Show indirect expenses in debit side and incomes in credit side. Subtract all indirect expenses and add indirect incomes. Get net profit or loss. Step 3. Prepare balance sheet. Left side includes capital and liabilities. Adjust capital with net profit or loss and drawings. Right side includes all the assets. The balance sheet should always tally. Adjustments in final accounts. Adjustments are entries not recorded in the trial balance, but are necessary to show true profit or financial position. Let us have a look at the adjustments. Closing stock. It is shown in trading account in credit side as income. It is shown as current asset in balance sheet. It helps determine gross profit. Next, outstanding expenses. Expenses incurred, but not yet paid. It is shown in debit side in profit and loss account. It is shown as current liability in balance sheet. Prepaid expenses. It is expenses paid in advance. It is shown in debit side in profit and loss account. It is shown as current asset in balance sheet. Accrued income. It is income earned but not yet received. It is added to income in profit and loss account. It is shown as asset in balance sheet. Next, income received in advance. It is income received for future periods. It is deducted from income in profit and loss account. It is shown as liability in balance sheet. Next, depreciation. It is the reduction in value of fixed assets over time. It is shown as expense in profit and loss account. It is deducted from asset in balance sheet. Next, bad debts. It is the irrecoverable amount from debtors. It is shown as expense in profit and loss account. It is deducted from sundry debtors in balance sheet. Next, provision for doubtful debts. It is the estimated amount of likely future bad debts. It is shown as expense in profit and loss account. It is deducted from debtors in balance sheet. The golden rule of final accounts adjustments. Each adjustment affects 2 accounts, one in the trading or profit and loss account, and one in the balance sheet. Important points of final accounts. 1. Always apply adjustments in 2 places. 2. Closing stock comes from outside the trial balance. 3. Depreciation, accrued income, and prepaid expenses are common adjustment items. 4. Drawings are subtracted from capital. 5. Net profit is added to capital in the balance sheet. This was all about final accounts. If you have any doubt, feel free to ask in the comment section. Thank you.